HDFC.org.
Welcome back. Well, steady state for the markets. The mid-cap index has also picked up a little bit of pace, so up around 0.5%. But no, it is not really IT, which is now the big sector of the day. It is the HDFC twins, which are really stealing the limelight in today's trading session. Just look at the way HDFC and HDFC Bank are rallying. Both of those stocks are at the high point of the day. So what is driving this? CNBC-TV18 learns that the MSCI inclusion overhang on HDFC Bank may in fact be lifted. Vivek Iyer is joining in with the details on this story. Vivek, go ahead.
Well, that's right. So the impending merger of HDFC Limited with HDFC Bank had led to quite a lot of confusion as to the treatment of the merged entity in the passive indices. So both MSCI, FTSE, and in fact, even in the Nifty or the NSE indices, there was quite a bit of confusion as to how exactly the treatment would occur. When would HDFC Limited be removed, and when would the merged entity be then put back in? In the case of MSCI passive index, the other confusion was the combined shareholding pattern and the foreign headroom within that. So that had also led to a significant amount of selling as far as FIs are concerned in both of these shares. Today, what has happened is the fresh update. MSCI has actually made amendments to the methodology document in the case of treatment of large corporate M&As, and HDFC and HDFC Bank clearly falls into this particular category. So what we understand, and quant analysts have been working up, the numbers, and what they actually make of this is that this basically means that this particular update on the MSCI website means that it now appears as though the merged entity would now not be removed but directly be added, and the weightage that HDFC actually enjoys in MSCI will actually increase, in fact more than double. So this increases the probability of HDFC Bank's inclusion in the MSCI India index, and this is the reason why today you're actually seeing such a sharp up move in both HDFC as well as HDFC Bank.
Take that point entirely, Vivek. In fact, as we speak, both these counters are at the high point of trade, and this was one of the reasons why they were underperforming in the past as well. The overhang of some sort of flows going out once this merger was to happen, etc. Now turns out that not only is the merger on track, importantly, it is perhaps ahead of schedule as well, and indices are coming together to ensure that there is not much move in terms of the expected weightage and flows moving out of these counters, and a big move is what we're seeing in both these stocks. Let's move on and talk about REITs. They reported a weak set of earnings for the second quarter, and that's primarily on account of a big amount of decline that we saw in their export segment, which was perhaps partially offset by their turnkey segment, which saw an over